The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to today's webinar sponsored by Big Society Capital, where we'll be going through the Business Impact Challenge, a quick overview and some more information about the criteria and what we're looking for. We're just getting a number of people joining right now, and we'll get started in just a second. Okay, so we're ready to go. My name is Travis Hollingsworth, and I'm a director here at Big Society Capital. And the purpose of today's webinar is to just go through what is the Business Impact Challenge and just touch briefly on why Big Society Capital is particularly interested in encouraging corporates in social investing, and just give you a bit more details about the criteria of the challenge. The way that it's structured is that I'll speak for 20 minutes, or roughly 20 minutes. Just giving you quite a broad overview. If there are any specific things that you'd like to hear about more, please submit a question in the question box on your webinar interface, and we'll take questions at the end. So you can feel free to submit throughout while I'm speaking, or at the end when we get to questions. So I'll first give a quick overview of what is social investment and what is Big Society Capital as an institution, and then I'll jump into what the Business Impact Challenge is about and how it relates to corporate social investment more broadly. Just a quick note first about Big Society Capital. We're an independent financial institution that was launched about 2.5 years ago. We have a social mission to build the social investment market in the UK, and that means that we have, we're basically an independent company separate from government. We act as a social investor, where we invest we make investments to achieve both social and financial results. So that means that we earn a return on our capital, but we also, every investment that we make has a very targeted social change or some kind of social impact associated with it. Our vision is to create a market where both individuals and companies can make investments in repayable finance, so that it's not just purely philanthropy, it's not just commercial investing. There's an opportunity to kind of merge the two, and that's what we're trying to build here in the UK. Right now, we are capitalized with £600 million from a combination of dormant bank accounts in the UK, so bank accounts that haven't been touched for 15 years, through an act of parliament, plus an investment from a number of high street banks. So far, in our first 2.5 years, we've structured and invested in about 36 investments across a range of topics, as you can see here. We've invested 150 million of our capital, and then on top of those investments, we always co-invest with another investor, whether it's a foundation or a philanthropist, also financial institutions, government. We always aim to co-invest at least on a one-to-one basis with our co-investors and partners. These deals cover a wide range of you could say, financial intermediaries, from investment funds that are targeting specific social issues like education or unemployment, investment funds that target a specific geography in the UK, a local area or community development, to, you might have heard of social impact bonds, we'll touch on that in a second, but an instrument that kind of links social outcomes achieved to financial payouts, to charity bonds, which are large charities that are issuing public or bonds in the public market, to crowdfunding platforms that are allowing everyday retail investors to support the social organizations that operate in their community. We're funding and supporting these ranges of intermediaries, and just some examples and kind of logos are there to give you a sense of what we're doing. And there's a lot more information on our website, bigsocietycapital.com, if you'd like to see more. Beyond our investing, we also advocate for, we're just a champion for the social investment market in the UK. So that means that we advocate for public policy changes, such as the new tax relief that we passed for social investors. And we also act as a convener on specific types of social issues and publish research and other things to champion the social investment market. What's important to note is that we, unlike, say, specific foundations or some types of social investors, we don't operate on any specific types of social issues because our mission is to build the whole market. So what makes us unique is that we can operate across any of the major issues that the UK is facing. And this makes us well matched to lots of different kinds of corporates to make social investments. So we can operate across all types of sectors. So that brings us to the Business Impact Challenge. What is it? It's basically designed to co-invest, where Big Society Capital will match any investment that a corporate is going to make between 5 and 15 million pounds into an explicit social investment. It can be in the UK, but the UK focus is really around the impact. So what we want to do is, the challenge is designed to take the best ideas. A number of companies are already looking at and trying to understand and fitting social investment into their agendas. And what we really want to do is take a step back and look across a number of sectors and identify the highest impact proposals and the most innovative proposals, and then increase their size and scale them up. And so that's what the challenge is designed to do. We'll provide match funding between 5 and 15 million, but we'll also provide support in helping to get the idea off the ground, to design it, and to just kind of fit it into the existing social investment landscape. We want to identify the ideas that have strong commercial and social impact. So every investment must have a clear revenue model, a clear business model, must earn a return on its capital, so it's not grant making. But it also must have an explicit social focus. So it has to set out a very clear thesis about what kinds of social impact it's intending to generate, and then a clear measurement framework on the back of that to make sure that it's achieved. We've put together a great panel to look at the ideas in May. So we're inviting companies to submit their best ideas by May 1st. And in May, this panel here will meet to look at all the ideas and select a short list, which will then be developed over the summer and for final investment in the autumn of this year. A sampling of our experts, we have the globalization and former finance editor of The Economist, Matt Bishop, the former chairman of Standard Chartered and former government minister, Lord Davies, Ian Davis from McKinsey, Martha Lane Fox, a tech entrepreneur, Karen Lynch, who runs Bellew Water, a very high-growth social enterprise here in the UK, Harvey McGrath, who chairs Big Society Capital and also is an outstanding philanthropist, and our CEO of Big Society Capital, Nick O'Donoghue. This panel will review the proposals, and just to clarify, we're targeting private sector organizations, so companies. It can be in any sector and any geography, although we'll only look at the UK impact of the proposal. And some companies have already come to us and they want to do partnerships with social sector organizations such as charities. That is permitted. We welcome that, in fact. There must be at least one private company in each bid. So I just thought I'd touch on what we see as the major areas of corporate social investment that we've seen so far. The challenge is designed to invest in almost any type of corporate social investment, but just to give you a flavor of what we're seeing, I thought to highlight 3 types of corporate social investment that we expect to come out of this challenge. The first one is around corporate investment funds, which operate very similar to corporate venture capital funds. The best examples here would be Barclays, which has an internal social innovation facility, which is a £25 million facility to invest in social purpose businesses within the company, so that people within the organization that have ideas for high impact businesses can apply to the fund and get support for their idea internally. Or externally, Centrica, an energy company in the UK, has launched its Ignite fund, which is investing in innovative social enterprises that tackle energy innovations, or that create energy innovations for disadvantaged people. But in either case, these funds can be managed either by the corporate itself or by a partner financial institution. But what's important for us is that the corporate partner that we would work with would put in capital, but also link in the investment into the business in a variety of creative ways, and there's a wide range of ways that they can be involved. But we don't want this to be a purely financial investment. We want a company to actually be involved in any way, shape, or form. The second area of potential investing that we see is around joint ventures between companies and social sector organizations and charities. As I mentioned, that this is eligible for the challenge. And here, a good example are kind of companies like Danone, who partnered with Grameen Holding Company in Bangladesh to create, I'll speak about this in a second, but effectively to create a social purpose business that then engendered lots of innovation throughout their organization. So partnerships are another area of setting up specialized kind of businesses that have an explicit social purpose. And the third area is around social impact bonds, where corporates could commission social impact bonds. If you don't know what a social impact bond is, there's lots more information on the Big Society Capital website. I won't go into it in detail. But effectively, it's a financial instrument that links the social outcomes that are delivered and measured to financial payouts. And I'll speak about this more in the example, but we see this as one opportunity for corporates effectively buying social outcomes from social sector organizations and paying after results have been achieved, as opposed to providing the upfront risk capital. So I'll just touch on one example in each of these areas now. So on the fund idea, I spoke about it earlier, but Centrica set up a fund to effectively invest in a number of interesting types of businesses in the UK that mainly were centered around energy innovation. So they kind of noticed the number of social enterprises were creating quite interesting businesses out of green energy for local communities, insulating houses for particularly disadvantaged people, or energy management services that help people manage their energy bills. And as a result, they started making these investments into £10 million fund run by Centrica. They make an investment into the social enterprise, and then they actually help that social enterprise scale up, grow, improve its kind of capacity building, but also they send their people into those organizations, which has actually yielded what they would say is a number of interesting benefits in terms of talent development and retention, as a number of people increasingly want to tackle meaningful social issues. So the way that the business benefit that Centrica sees is both a kind of ability to grow and kind of understand energy innovations in the UK, but also an ability to kind of retain and develop its talent by working on specific social issues. The example we have here, and it's also on our website, of a joint venture is this Danone Grameen joint venture, which is really interesting in the sense that it's a partnership between a commercial organization, Danone, the dairy company, and Grameen, which is kind of run by Mohammed Yunus, this Nobel Peace Prize winner. And they effectively created a social purpose business that was entirely centered around delivering nutritious yogurt to children in Bangladesh that wouldn't otherwise have access to it. And what was interesting about this is that they partnered together, and that was the whole purpose. So they created almost an innovation lab within both of their organizations that was completely focused on solving these issues. And out of this, their engineers and their designers, which the CEO of Dunham will tell you that they worked relentlessly over weekends. Everyone was so motivated to solve some of these issues that they developed new recipes that were able to be shipped longer without refrigeration. They designed new factory templates that were then much lower, like a third of the cost of a normal factory, and they were able to replicate that in Africa and India. And they were able to kind of, in that sense, it became an innovation lab for both organizations. And so this is an example of the kind of thing that a corporate in the UK could also do by partnering with very targeted or specific social organizations to actually innovate around an idea or a social problem. The third and last example is around a social impact bond that has been commissioned by Nando's, Coca-Cola, and Anglo-American in Mozambique. In Mozambique, malaria is a really big health issue, and it's a cause of really poor health, and specifically for these companies, it's a cause of absenteeism. It creates a lot of costs for them. So what they've agreed to do is that a number of charities and social enterprises are going to treat people for malaria prevention. And if people basically show up to work more often than kind of cohorts that are not treated, then these companies will pay out a return to the social organizations and the social investors for basically providing the intervention. The idea here is that these businesses understand that a social issue like malaria and health affects their business, and they're willing to actually invest money behind that to counteract that through social organizations. And we've seen a number of very interesting proposals coming through already on how companies in the UK could actually use this model to address specific and very targeted and measurable social issues. So you can probably gather what corporate social investment is based on all these examples, but just to clarify, it is something that hits a financial return, social impact, and is strategic for the company. And to be honest, one of the reasons why we made the challenge quite a large amount of money and investment, up to £15 million, is that we wanted it to be sizable and meaningful for any of our corporate partners. The other reason why the corporate social investment must be strategic for us is that in order to unlock the value of partnering with a company, it really is not a financial partner. We see it more as a company offering talent, resources, networks, leverage to do something that we would otherwise not be able to do as a financial investor. There are three areas, I'll just put these up on the screen, but there are three areas that companies seem to be most interested in, or why would you do corporate social investment. One is around retaining and motivating talent. As I mentioned, people are increasingly seeking meaningful work, and it's also a sector that is able to develop talent in a very different way than a pure commercial sense. On the innovation side, as I mentioned with the kind of Grameen Danon experiment, really to try and Centrica is another great example of this, but taking investment stakes in long-term business models is a potential source of innovation that's coming out of the social enterprise sector. And lastly, by targeting a deprived or disadvantaged group, you can reach new markets and also develop new products. So what are we looking for in proposals for the challenge? Just touch on the three criteria, which are also on our website, businessimpactchallenge.com. First is social impact. So here we want to see a very clearly articulated social purpose. So it can't be an open-ended type of social impact. It needs to be a very clear and targeted social purpose that is related to what the business does on a normal daily basis. So there needs to be a strong link between the core business and what you're investing in, what this investment will be designed to do. It also needs to be measurable. So here the social results need to be quantifiable to an extent. And if you want more information about what kinds of measurement we look for or examples, you can check out the outcomes matrix that we've developed on the Big Society Capital website. It shows a framework for all of the different social outcome areas that we look for when we're investing. The second area is around the business model of the investment. So any proposal for the challenge must have a clear revenue model and basically be a very, very strong business model. We'll also favor innovative investment vehicles or innovative ways of doing things, not a typical fund structure, but we're seeing a number of very interesting spin-out ideas or a number. So we're kind of favoring, and we will favor proposals that have quite an interesting spin on them and kind of are additive to the market. And lastly, there is a minimum of a 5% financial return. For particularly risky investments, we'll expect that to be much higher, but we will not invest in anything that we don't believe we can get a 5% return out of. And then on the delivery side, we want a commitment from the company to actually deliver this. So that means a senior sponsor, that means demonstrating that you can do this, and also that your core business has a competitive edge to actually deliver whatever type of social change and business model you're proposing to deliver. So this is the criteria that the panel will look at to evaluate the proposals in May. Why might want to work with Big Society Capital what's interesting is that we've structured 36 investments in our first 2.5 years, and while we do have capital to invest, we also have a working knowledge of how this investment process might work. So I'll just walk you through some of the ways that we can support corporates in developing propositions. First is on identifying the social need and opportunity. So here we have an expert network in social issues like education, health, and justice to help companies sound out and identify where business models are likely to tackle some of these social issues, and also to fit that within the broader context of what's already been done in the social investment market. The second area is around designing. We've structured and invested, as I said, 36 types of investments ranging from funds to platforms to investments into financial institutions, etc. So we can try to work backwards in setting of the right investment structure based on what the corporate wants to achieve. We can invest, obviously. So we have an investment team that can carry out full due diligence from the social and the financial side and has experience on that. And then we can also help you monitor through our investment, monitor the social and financial outcomes of the investment. The process from here is we'll accept concept papers, a 2-page concept paper, which can be submitted on the website businessimpactchallenge.com. That is open until May 1st. We'll close that. The panel will meet in May, shortlist the best ideas, and over the summer, Big Society Capital will work, and the corporate will work together to try and develop the proposals as far as possible, with a final decision from the panel on the winning entry in the autumn of 2015. Between now and May, we're also hosting an open house event on the 19th of February, where you can come to Big Society Capital's offices in London and talk through your idea if you want to meet the team, etc. It'll basically be an open house if you want to sound out criteria or talk about anything related to potential investments. And we're also forming a working group in partnership with Business in the Community of companies that are particularly interested in learning about how social investment can fit into their business. If you'd like to know more about this, we're right now in the process of assembling the group. You can email me, Travis, or it's basically through the website. You can find my email at the bottom of the page. You can email me if you're interested in being part of this group. So, in the meantime, we're more than happy to take any questions on this webinar. But again, by May 1st, you need to submit a 2-page concept paper for evaluation from the panel. You can do all of that on our website. If you have any trouble, you can contact me, Travis Hollingsworth, with any questions. So at this point, I'll open it up for questions. Just checking. So there's a question about social impact bonds with the average deal size being in the 1 to 2 million ballpark in the UK. How would you intend on investing the 5 to 15 million amount into an overall investment? So the answer here, I would give you 2 answers. One is that there's an opportunity to create a fund, which would be a diversified kind of holding structure for lots of social impact bonds. So that's one option. The other option could be around, depending on the time frame, staggering out that investment over several years. So you could invest in several tranches of social impact bonds if depending on what the issue area was. So we can be quite flexible about how we get to the £5 million minimum. Someone's asking here for the slides. I can send you a copy of a PDF of the slides after the webinar. Don't worry. Someone's asking about, are applications open to charities, corporates, as well as joint ventures? Anyone is eligible to submit. Any type of proposal must include a private company. So there have been a number of large charities that have contacted us about potential proposals, but they do have to submit with a corporate partner. We are looking to make, there's a question about, are you looking to make one award or many? There will only be one winner of the challenge. That said, we do see this very much. I mean, this is a very significant amount of investment, so we do want to work with companies to actually develop the ideas. As you may know, we have a normal investment process where organizations can submit an expression of interest for a social investment, and we would diligence it accordingly. And that would be separate from the challenge process prize, or challenge prize process. So there will be only one winner of the challenge, though. How will you work with other investors? The answer, yes, we will work with other investors. We tend to, I mean, in this case, with the other investor being a company, we would work in collaboration with the company to almost dovetail our mutual criteria to make sure that the investment works for both of us. So a number of corporates that we've been talking to have already expressed a number of strategic priorities that they want to get out of potential investment. Similarly, we have our own priorities around financial and social returns. So we basically can collaborate on how we can best design an investment to fit both of those needs. So we do work with investors. There's a question about, will investments be made via an intermediary fund or direct? The answer is, I guess I should have said earlier, but Big Society Capital is a wholesaler, which means that we do not invest directly in social enterprises on the front line. We always work with partners to develop investment funds or invest through financial institutions. So any proposal would have to be effectively an intermediary or something that's supporting social sector organizations through that. So it would have to look similar or relatively similar to what we've already invested in. So it could be funds, it could be platforms, it could be innovative things that are advising local authorities or other kind of organizations that are working with social sector organizations. So it does have to qualify as a definition of an intermediary. And for more information on what we define as an intermediary, you can check out the Big Society Capital website for our investment policy. Will you work or not work with local authorities, outsourced providers of public services? We will. I mean, there's no exclusion of sectors or type of organization that we won't work with. It'll need to basically comply with the same criteria as everyone else. So we're not excluding local authorities, although they do. Any proposal must again have a corporate as a partner. Do you do matchmaking between social organizations and corporates? We don't do official matchmaking. That said, if you have a specific idea in mind as a corporate, for instance, if you have strategic priorities, or as a charity, if you have a specific social issue, you can highlight it to me, and I can try and triangulate based on what I know from the deal pipeline that we've been seeing as a result of this process. But beyond that, we do not do explicit kind of matchmaking. But we're happy to help where we can. Yes, private companies include PLCs, just for clarification. There's a good question about social impact bonds. It's saying that, you know, if companies are commissioning social outcomes, and traditionally Big Society Capital has acted as an investor, how would that work? Would Big Society Capital actually be commissioning outcomes as well? The answer is no. We would. So, just as context, I would say a corporate commissioning social impact bonds would be a brand new concept. So there's no real kind of track record for this. So we can innovate in interesting ways, and we're happy to think through this. My expectation is that the corporate would commission the outcomes, and then either Big Society Capital would, with a partner, or Big Society Capital itself could act as the investor in a social impact bond. So it could provide the risk capital as long as there was a clear driver of demand from the corporate on the other side. So we can be quite flexible around that, but it's likely that we would be the investor in that deal, not the outcomes buyer. There's a question here about returns. If 5% is your minimum, what is your sweet spot? Are you looking for 10% and above, or is it increasingly risky proposals? I think we just do expect a commensurate kind of risk-return normal payoff. Traditionally, you could think about it on the impact spectrum, where you can face this, what should I say, basically the more potentially early stage or new idea, to the extent that it's a really raw idea, we would expect a higher return target. If it's something that's been piloted, the corporate has experience doing it, it's a relatively established model, we would accept a lower financial return. But in both of those cases, it's not really a sweet spot purely from a financial returns. We balance, as an investment process at Big Society Capital, we balance the ability for this investment to develop the market for social investment, the financial return, and the social return. So to the extent that those investments meet the variance of the various balances of those three factors, we don't have an explicit kind of sweet spot. 5% investment, does it include management costs? It would be a return after costs, after risk and management costs. Is there a time scale on when you'd like to see the money out? No, there's no explicit time scale that we've put forward as part of the challenge. However, certainly the ability to kind of execute per the kind of delivery criteria is very interesting to us. So to the extent that money can get invested faster, it will be prioritized. But no, I mean, again, this is a balance of innovation with ability to execute. So it's a bit of a tension there. So there's no easy answer to that, I should say. Can social sector participants put in money to, i.e. the corporate brings 2 million, charity brings 2 million, and you bring in 6 million? Good question. I think it's possible as long as basically, so if you're basically saying that a charity and a company would come together and bring a kind of consolidated set of capital to match Big Society Capital's investment, that would be possible. We need to think about some of the legal requirements around whether that would be a subsidiary or not, but in principle, that makes sense. Are there any constraints on how the funding can be spent, i.e. deployed capital versus build infrastructure? No, there are no constraints, although the overall business model will have to deliver a reasonable kind of commercial organization that is well funded and can deliver, and also have a return after all those costs. Does the program have to be in the UK, or can it be in one area, etc.? Geographically, we're pretty agnostic. We, in the past, have supported regional funds, and we tend to find that the more targeted an investment thesis is around a specific region or a specific social issue, it can be quite powerful in unlocking capital and achieving social change. That said, we will even accept international proposals, but we'll only look at the impact that happens in the UK. So there could be a European-wide proposition, and if it had a very strong impact in the UK, we would still be willing to entertain that and invest in that. So there is no explicit geographic target. How many attendees do you have on the webinar? What's the interest in this? Well, right now we had 30 people to sign up to the webinar, which we were happy with. We're hosting 2 of these, one next month as well. Overall, the interest has been surprisingly strong from a wide variety of sectors. I think what we found, this is more of a personal comment, but I think there have been a lot of organizations that have already been thinking about social investment and this is in some ways bringing them out of the woodwork. So there are some pretty well-developed propositions out there, which I'm very impressed with, from spin-outs to commissioning social impact bonds to very clear fund ideas with a clear investment thesis. Already, I could count over at least 15 ideas that we've seen from companies. Again, our goal is just to get one really great investment out of this, and this is a considerable amount of money. So from that perspective, I'm quite intrigued by the interest. What's interesting is how diverse the sectors are. It's from retail companies to construction companies to healthcare firms to financial services companies. And what makes that really interesting is that each company, in a way, is finding a place for social investment and how it can drive value in their business. And that's really refreshing to see, and that's probably the most surprising part about the interest. So with that, I will close the webinar unless there are any other questions. Thank you for participating, and if you have any further questions, feel free to get in touch with us through the website, businessimpactchallenge.com. Thanks.